the Goldmine Podcast.
But I think the returns you can expect, whether it's your own rental or syndications, is probably not tremendously different. But I'm finding also I stopped buying rental properties partly because it became very difficult to cash flow, right? Property values had gone up. Rents hadn't gone up as much. Financing rates got more expensive. So if I'm looking at single family or, some of the stuff I bought 5 to 10 years ago, I'm looking for that product now, cash flow, it's almost not there. It's hard to find any cash flow. Again, maybe there's C properties that on paper with cash flow. So I think it's harder to find your own rental properties that cash flow today. That was a few years ago, obviously. Mm-hmm. And so I think the group private equity deals offer some amount of cash flow that may be even harder to get in the single family space. So I think you have to adapt to the market, right? And things change. And so I think there is available cash flow if that's your objective. If you don't care about the cash flow, there's projects that might offer a bigger kicker on a development type deal, but those also have more risk, right? So
100%. And actually, I was going to ask you before we move on, as an LP, and I know that you're kind of sponsoring your own deals now, but like as an LP, when you're assessing a deal, what are the metrics that you're looking at? Obviously, you're vetting the sponsor, right? So you're understanding like what their track record is and everything. But do you have like a checklist? Like what are some of the basic things that you're looking at when assessing a deal?
Yeah, I think first and foremost, what's probably most important is the operator. They say bet on, the jockey, not the horse.
Yeah.
So first of all, make sure you're comfortable with the people you're going to place money with. The property's important. The market's important, obviously. But, how long have they been doing it? What's their experience level? Past project performance, a lot of conversations you might have with them to get comfortable that they're looking at the right things. I like to evaluate underwriting, right? Because I'm a numbers guy. Much of my career, I was a CFO type role, financial planning role. So I'm very comfortable looking at numbers and modeling. And so I like to see how sound their projections are, because I can get into the details. So that's probably one of my strengths. So everybody's going to have probably a little different criteria, but I think it's important to do your own vetting and make sure you're comfortable, and maybe the first time you invest with somebody, you just go in at the minimum and kind of, wait and see before you invest a lot of money with somebody. So you kind of like crawl, walk, run, right? So typical progression. But and that's probably a whole different podcast, right? The criteria list on, some people do background checks, right? To make sure that these people are who
they say they are.
Yeah. I think also it's just experience through multiple market cycles. If somebody's only been involved in real estate for the last 5 years, there's just a lot there are a lot of wisdom and learning that they're not going to have, right? Versus somebody who's been involved much longer, in more seasoned investors. So again, before I got involved as a GP, I've been investing in real estate about a dozen years. And so there's some level of experience and track record that I can bring to bear, right? Before management of property for others, right? So it's okay to make mistakes, I think, early in investing, but I think it'd be the wrong approach to make mistakes with other people's money. You know what I'm saying?
Oh yeah, 100%.
If you make mistakes on your own property, that's the learning, and you can grow from that. But it would be a lot, I think, harder to swallow if you're raising money from somebody else and you make those learning mistakes, because that would be a little less sound, I think. So experience, right? Experience level speaks a lot.
Going back to your W-2 days and in growing and scaling your portfolio while you were while you also had this other job, how did you manage your time? Like, how did you manage to do both? Because I think a lot of listeners they're interested maybe in investing in real estate. Like they'd really like to do it. And maybe they have 1 or 2 rentals, but they haven't really found the time to really take it to that next level.
Yeah, that's a good point. For me, I think going way back, just out of college, this goes back to the 1990s. I'm a bit older than you. I was interested in real estate. I remember this is before they had the meetup.com, but there were some local meetups and adult education classes that I participated in where people were talking about real estate strategies and flipping homes and various different ideas. And it always struck me as something I wanted to get involved in I felt like real estate's a good investment for long term. But at that point, frankly, I didn't have the capital. I didn't have the time. So I think the two aspects are time and capital. And so it was always in the back of my mind that, yeah, I'll get involved. It wasn't until I was about 40 years old that I got involved and started to buy rental properties. And at that point, because I had been working, decent paying jobs and so forth, I was able to save up capital. So for me, it was the capital more than the time. I don't want to say it takes no time, but if you have an interest in it, you'll make time for it, right? So me, I just needed to accumulate enough capital, and then I'm ready to, get involved. So some people have a lot of capital, maybe a lot of time, not capital, and there's different avenues and ways that people try to get involved. There's so many ways in real estate you can make money, whether it's wholesaling or whatever else, right? So it's not impossible to make money in real estate without capital if you have the time, but there's maybe a lot more time and energy you have to put into it, right? So I was able to balance it. At a certain point, my day job wasn't tremendously demanding. It wasn't like 60 hours a week. Maybe I had those times at work in my 30s where I was working a whole lot. Got to the 40s, it was a little bit more steady and more predictable, and I was able to do the real estate stuff. So I never felt like it was overwhelming. But part of it is you have to kind of want to do it, right? I don't mind doing the bookkeeping and getting all this stuff ready for taxes and keeping track of things. So it can be tedious, and it's not for everybody. But I think those are some of my skill sets: are organization, record keeping, bookkeeping, spreadsheets, etc. So that part of it didn't feel like it was going to be too much, right? When I was doing that along with my day job.
One thing that kind of stuck out to me there as you were going through that is I can't help but feel like one of the things that one of the attributes that you have is patience, because you didn't start doing anything until you were 40. And so you're like, I'm going to wait until I have a little war chest here to go out and start doing stuff. And in being patient, you also were able to enter the market at the right time.
Yes, I do feel like patience definitely pays off in real estate. I mean, it's not a get rich quick game, right? There might be some strategies here or there where you can make a lot of money quickly, but for the most part, I think there's that saying that time in the market's going to trump timing in the market. So it's really hard to time the market, whether it's a stock market, real estate, whatever. So if you're sitting there thinking, I'm just going to have to wait and get in at the very bottom, you might be waiting. You probably miss. You don't know where the bottom is until it's fast, right? And so I think I think consistency, finding a strategy that works for you and consistently doing it over time has worked for me, right? So I consistently started investing in rental properties over the last 14 years. I couldn't replace my income in the first 4 or 5 years. It's taken me 10 to 15 years to do that, right? So patience and time and just finding a strategy and sticking with it, to your point, is part of the process that people have to kind of understand, right? I know that we have an impatient society. People want to make it big overnight, but real estate's one of those things that typically will take some time.
What do you mean I can't get rich in my 20s? Yeah.
Also, I'm a pretty conservative investor, I would say.
Okay.
I'm happy with a bunch of base hits versus swinging for the fences, trying for the home run, because maybe you hit that home run, but you're going to strike out a lot too. So maybe you have a couple projects that go to zero and you have a home run. Is that better or worse than just hitting a bunch of singles? So people have different philosophies, but I'm okay hitting just solid base hits every time and not swinging for the fences. Trying to find projects that are fairly low risk and offer attractive returns, right?